And for a detailed look at the financial consequences of the US defaulting on its debt, we're joined in the studio by economics correspondent Stephen Long. Stephen, before we get to the debt issue, we've just had some figures out on economic growth in the US. Good news or bad news?
Bad news. The second quarter growth figures have come out much weaker than the market was expecting, Steve. 1.3% annualised pace. And even more significantly, the first quarter has been revised down to an annualised pace of economic growth of just 0.4%, less than 0.5%, from just under 2%, and consumption has collapsed. The personal consumption figures just 0.1% growth. Very, very bad news for the US economy, and it shows that this debt argument is happening at a very, very difficult time.
So back to the debt issue. Could it be possible that US could default on its debt?
It's possible when you look at this bizarre politics, but I am sure that even if they don't get an agreement on lifting the debt ceiling, they will be doing their damnedest to avoid actually defaulting on their debt, including not paying contractors, possibly not paying public servants, not paying healthcare checks and social security, rather than not paying their creditors. Because if they do not pay interest and principal on their debt, the potential consequences are catastrophic.
Tell us more about some of those consequences.
One of the potential consequences is a collapse in the banking system worldwide. We've had discussion about ratings agencies cutting the US rating from AAA to AA, but what people don't seem to realise is that if the US actually defaulted and wasn't paying interest and principal on its debt, then it would be downgraded to D, default, lower than Greece. Now, banks around the world hold US Treasury bonds as collateral. If they were in default, then they may not be able to use them as collateral to exchange with central bank authorities for their daily money they need, and they would overnight have to raise trillions of dollars in cash. You'd have a huge sucking sound as they tried to do so. Mayhem on the markets, a shutdown of the banking system. It just doesn't even bear contemplating.
Now, US government bonds have always been considered risk-free. What if that changes? What are the economic consequences globally for that?
This is one of the most significant things, Steve. You have a situation where this has been the definition of risk-free money, the classic safe haven, and all investments around the world are benchmarked ultimately on US Treasuries as the definition of a risk-free return investment. And so when you have that situation where companies investing money, accounts are being organised on this, and we implode that benchmark, then you'd have huge knock-on effects right throughout the financial system, and the US dollar simultaneously is lowering in value and would potentially collapse in value if the US was to actually be in default.
Stephen Long, thanks for that. We'll talk to you again next Friday.
You're welcome.